The global trade landscape is once again characterized by uncertainty as the United States, under President Trump, engages in a high-stakes tariff battle with China. Trump recently announced a 90-day pause on further tariff increases on Chinese goods, sending shockwaves through international markets. This decision, while offering a temporary reprieve, follows a series of escalations impacting economies worldwide. With billions of dollars in goods caught in the crossfire, the stakes are high for businesses, consumers, and governments alike. The 90-day pause provides a window for negotiation, but does little to alleviate underlying tensions. The interconnectedness of global trade means the ripple effects of this dispute will be felt far beyond the borders of these two economic giants. The hope is that dialogue and diplomacy will prevail, leading to a more stable and predictable trading environment for all. The recent chapter in the U.S.-China trade war began in early April 2025, when the Trump administration announced a significant increase in tariffs on Chinese goods. These tariffs, which raised the price of imported goods for American consumers and businesses, were met with swift retaliation from Beijing.
The immediate impact of these tit-for-tat tariffs was felt in the stock markets around the world. Major indices experienced sharp declines as investors reacted to the uncertainty created by the escalating trade war. The Dow Jones Industrial Average tumbled by hundreds of points, reflecting growing anxiety within the business community.
Beyond stock market fluctuations, the tariffs have had a tangible impact on consumers and businesses alike. American shoppers face higher prices for a wide range of goods, from electronics to everyday household items. The disruption to global supply chains is another immediate consequence, potentially slowing down economic activity and contributing to a decline in global trade. While the immediate impacts of the trade war are already being felt, the long-term consequences are potentially more concerning.
One of the most significant long-term risks is the potential for a global economic slowdown. As tariffs disrupt trade flows and increase costs, businesses may be forced to scale back investment and hiring.
The trade war also threatens to unravel the complex global supply chains that have been built up over decades. As businesses seek to avoid tariffs, they may be forced to relocate production or source materials from different countries.
Beyond the economic consequences, the trade war has the potential to strain diplomatic relations between the U.S. and China. The escalation of tariffs and the rhetoric surrounding the trade dispute have heightened tensions, making cooperation on other global challenges more difficult.
Section 4. The Art of the Deal, or a Game of Chicken. The 90-day pause on tariff increases, while offering a glimmer of hope, has done little to quell the uncertainty surrounding the U.S.-China trade war. Some analysts view the pause as a strategic move by the Trump administration, a negotiating tactic designed to extract concessions from China. Others see it as a risky game of chicken, one that could backfire and lead to further escalation.
Trump's approach to trade negotiations, often characterized by aggressive rhetoric and a willingness to use tariffs as leverage, has kept businesses and governments guessing. The question remains whether this tactic will ultimately prove successful in achieving the Trump administration's goals of reducing the trade deficit with China and protecting American jobs. Skeptics argue that tariffs are a blunt instrument that often harm the very people they are intended to help, namely American consumers and businesses.
Section 5. Public opinion, a house divided. The U.S.-China trade war has ignited a fierce debate within the United States, with public opinion sharply divided on the issue.
Proponents of the tariffs argue that they are necessary to level the playing field with China, which they accuse of unfair trade practices, such as intellectual property theft and currency manipulation.
Opponents of the tariffs argue that they are counterproductive and ultimately harm American consumers and businesses. They point to the rising costs of goods and the disruption to global supply chains as evidence of the negative impacts of the trade war. The issue of trade, once a relatively technical matter, has become increasingly politicized, with both sides accusing the other of prioritizing political expediency over the economic well-being of the country.